So welcome to lecture 9. And in lecture 9, what we are doing is partnership taxation. Partnership taxation. And the taxation of partners. All right. So what is a partnership? We all do know that it's a situation where more than two people come together to form a business, all right, to make a profit. Now, we are also told in those days of business management and law that usually the membership is between 2 to 20 people. Okay, so that is kind of the definition of a partnership. But here, what we want to draw your attention to is that there are two types of partnership, and whereby in the first one, we have what we call a general partnership. General partnership. And we have what we call unlimited partnership. Unlimited partnership. Now, what is the difference between these things or these two? All right, it's just that in the general partnership, every partner has equal responsibility. All right, so they have equal responsibility for the management of the partnership. All right, and again, their liabilities are unlimited, which means that in case of anything, their personal assets can be charged with. All right, so they have unlimited liability. Okay, that is that. But when it comes to the, this one should be limited partnership. Okay, so it should rather be limited partnership. Limited partnership. All right, strike this. When we talk about limited partnership, you realize that this one, not everybody is part of the management of the partnership business. Not everybody is part. It is such that some will be part, some will not be part. Some people will come in and contribute capital, and some people will also decide to do the management. So you have some of the partners who are actually running the business. It's just that some of the partners also came in to contribute capital, but they are also partners. All right. And also here too, their liabilities are limited. Like you see the word limited. So they have limited liability. All right. So that is that. That is that. So the others, so this one, you see that we said that equal people with equal responsibility, but this one is not like that. It's not like that. So we have liability, the people who contribute capital to the partnership, but will not be part of the management. So there is unequal responsibility. Unequal responsibility. So basically, that is that. All right. So this is the small distinction between the two. But we are not interested in all these theories because our topic is mainly about how to tax them, not how to, discuss what the differences between partnership are. So we will be looking at how to tax the partnership. All right. So when it comes to the partnership, these are the tax issues that we should be looking at. All right. Now, according to section 52, you see clearly here that it outlines the taxation of the partnership. All right. So that is that. Now, first of all, what you need to understand is that, so let me say taxation of the partnership. First of all, what you need to know is that the partnership is a business. So don't confuse the partnership with the partners. Partners are individual. The partnership is the business. So as far as the business is concerned, the partnership do not pay, or they are not liable to pay income tax. All right, so that is that. They are not liable for income tax. That is the partnership, not the partners. All right. Okay, so that is the first thing you need to understand. All right. Okay. So again, the partnership will not have any tax credit. Partnership would not have any tax credit. So no tax credit is granted. Because if you don't pay tax, sorry, please, let me correct these statements, okay? If I say they don't pay tax, it will mean that they don't pay VAT, because VAT too is a tax. But what I mean here is that they don't pay income tax, all right? Income tax, all right? So they will not get no tax credit because they don't pay income tax. So that is that. No tax credit is granted to the partnership income. When we say partnership does not pay income tax, it is their money, all right, which they are not paying the tax on. But partnership are responsible for paying withholding tax. What does withholding tax mean? The withholding tax means that when somebody renders a service to the partnership will be paying that person. In paying that person, the partnership is meant to withhold tax and remit to GRA. So in a sense, it is not the partnership who is actually paying the tax. It is the tax they've withheld on somebody's money, and they are rather paying that money to GRA. Okay, so partnership are responsible. So you see, oh, okay, everything is here. Partnership are responsible for paying what? Income tax on final withholding. So they are responsible to pay withholding tax. All right. On monies withheld from service providers. All right. So please take note of that. It's very, very important. All right. Then we come to the allocation of income and loss. Okay. So if the partnership make profit, what happens? So here it says that the income or loss of the partnership are distributed among the partners in accordance with the specified division, i.e., the profit or loss sharing ratio. In the old law, what we used to have is that the income is shared, the loss is carried over. But here, both income and losses are shared to the partnership. All right. Then it says that when a partner joins media, profit should be prorated monthly. So what you are prorating is what? The profit. I'll explain this thing to you. Profit should be prorated monthly. The total profit before the new partner join, all right, before the new partner join, is shared among the old partners, and the total profit of the subsequent period is shared among what? The new membership of the partnership. What does that mean? Let me explain to you. It means that if for a year of assessment or in a basis period, we made a profit of 1,000, all right, and at the beginning of the partnership, we have two people in the partnership. So we have two people in the partnership, probably sharing profit or loss in the ratio of 50-50. Okay, then, so let's say these people are the ones who started. All right, then somewhere along the line, let me use 1st July 2022, there was another person who joined. So it will be the total people in the partnership will be 3 people. But in that whole year of 2022, the profit that was made is what? 1,000. What this principle is basically saying is that, you see, when this person joined, the profit or loss ratio will change. It can't be 50-50 anymore because there is one person. So let's say it is 40, 40, 20. All right. So that is that. What then will happen is that we will have to first split this money into two. But he joined on 1st July. So splitting it into two will be like 6 months. So here will be 6/12 of that 1,000. Then here too will be 6/12 of the 1,000. Which means we have 500 here. And we have what? 500 here. So if she had joined in March, it will be 3/12, 9/12. So that is that. Okay, so anytime the person joined, that's how you are going to do it. All right. So in that case, it means that these 2 people will be sharing the 500. So everybody will get what? 250, 250. All right. Then here, there are 3 now. So 3 people will be sharing this money. And I think everybody will get, the first person will get 200, second person 200, third person what? 100. So we have the total of 500. So it means that in the year in perspective, the persons here, let's say it is A and B, this was A and B, and the new person was C. You realize that this guy total is 450. This guy too, the same thing, is 450, making 900, and Oga here will have 100. So that is the sharing of the 1,000. All right, so that is that. In the same vein, if somebody leaves the partnership in media, we are going to do the same thing. So assuming that this was the beginning of the year, all right, in this case, this is the beginning of the year, and in this case, this is the July. It means in the beginning of the year, there were 3, and there will be, you have to still split the money into the month, the profit, share the profit in the months, according to month, all right? Then in the beginning of the year, which means that we will have 500, 500, which means that in the beginning, this is what they will have. When the one person leave and the ratio changes back to 50-50, this is what they will also have, all right? So basically, that is that. So what it is trying to say is that split the profit, spread the profit over the months, okay, and use before somebody join, use the ratio before the person join on the first split that you have done. Then when the person join to use the new ratio for the remaining part of the money that is left, of the profit that is left. If somebody leaves to, what is going to happen is that you are going to use the initial sharing ratios on the splitted profit. Okay, please make sure you split the profit. That's all. That's the key. If you don't split the profit, you get everything wrong. So first split the profit, then use the sharing ratio in each and every respective part of the year. So that is that. Okay. Now, it says that treatment of amount and expenditure. So amount derived or expenditure incurred by a partner on behalf of the partnership is money for the partner, not partnership, not the individual partner. So if I go to some place and render, or I use my money to buy food or to go and do a business for the partnership, and I come back and collect my money, that money is not an income to me as an individual because I did the thing on behalf of the partnership. So it is the deduction on the partnership, not the individual. The same way too, if you have any asset and liability owned or owed by a partner on behalf, you see, the thing is on behalf. If I do something on behalf of somebody, it is not me. All right, it is the person I did on behalf of. All right, so basically that is that. If it is on behalf, then that is it. Okay, so that is that. We treat a partnership as a business. So business income taxation applies. It's just that at the end, when we get the profit, we will share the profit among what? The partners. We will not tax the profit, but share it among the partners. All right. Then this is the most important part you need to be careful of. This the point 5.6. You need to be careful of that part. Now, what does it say? Look at this. Recognition of arrangement. It says that arrangement between the partnership and its partners are recognized in determining the individual partners' share. All right, subject to the act. Okay, so if there is any arrangement, it is recognized. All right, but this arrangement does not apply to certain cases, such as loans made by partner to the partnership and related interests and services provided by a partner to a partnership. So it means that if in case they were doing the business income of the partnership and they deducted loans as expense, you will have to add it back because it is not recognized as such. If they deducted interest, you will add it back. Okay, you will add it back because related interests are not allowed. It is not recognized. Then services provided by a partner. So a partner will provide a service to the partnership and charge money. No. If you remember what we learned in employment income, it says that an individual in the position of management, in the position of a manager, other than one in a partnership. So it means that in a partnership, a partner cannot be employed. A partner cannot be employed. So you can't say you paid your partner's salary. No, we will add it back. So these are things that you need to be very, very careful about. Of course, in some CA papers, the examiners keep eyes off that. People don't add it back, but it goes ahead to, give them the score. But it doesn't mean go and do that. You don't know when things will actually take its own course. All right, so please be careful. Be careful. All right. In case of change in partnership, if two existing partners continue, the partnership is treated as the same entity before and after the change, because one person cannot form a partnership, and so therefore, at any point in time, if two of the existing partners are there, it is the same partnership. You can bring in 10 million people, change whatever constitution, change this, change that, it is still the same partnership. All right, so that is that. Okay, then we come to the taxation of the partners. Of course, at this point, they become an individual. All right, they become an individual. So if the salaries, this is where you add it. So if you share the profit, adjusted profit, then you add their salaries. So you start from the income or loss that has been shared among them. If they have any gain on disposal of their interest in the partnership, it is an income to them. Tax paid by the partnership is treated as tax paid by who? The partners. Even though they don't pay tax, if they make a mistake to go and pay a tax, it is actually the partners who have paid the tax, the individual partners, not the partnership. All right, so that is that. Okay, the last thing is the allocation of the partnership income or loss retains its character as to the type and source, and it is allocated to the partnership in proportion of their shares, unless the Commissioner General determines otherwise. What it's actually saying is that any income that the partnership is engaged to, if the partnership was engaged to investment, was also an employment thing, the income was deemed to be sourced from investment or sourced from business. All right, so that is that kind of thing. So if the partnership did an investment, the income is deemed as what? Profit shared among the partnership from investment. If they use the partnership for a business and the profit is shared, it means that the profit is shared from a business partnership. Okay, so basically that is that. And again, a partnership is resident in Ghana if it is resident in Ghana, or any of its partners resided in Ghana in that particular it says that any of his partners resided in Ghana at any time in the year during the year of assessment. So please, that is that. Any time in the year. All right. So quickly, let's look at the past questions. Let's look at the past questions. All right. So what we have here is 7 marks. During the year 31st December 2018, the partnership of David, Stella, and Person reported adjusted profit of 951,000 before charging partner salary, interest on and cost of traveling for leave. Of course, it is before charging it. If they had charged it, we would have added it back, because you heard us say in the law that the recognized arrangement doesn't include salaries, interest on loans, and capital, and any other services rendered to the partnership by the partners. So it makes this thing simple. All that we're going to do. So this is what you do. So you have been asked to do the accessible income. So what you do is simple. So you say that determination of adjusted profit is done for you. So there is no need to do any determination of adjusted profit again. What you do is that we have David, we have Stella, and we have Percy. Then computation of accessible income. All right. Which year of assessment? 2018. Basis period, therefore. Don't forget, for individual, basis period is also the calendar year. So please, that is that. All right. So here we go. Then I bring here David, Stella, then here is Percy. Guys, just a minute. Let me take this off. All right, then we start with the share of profit. The share of profit, what do we have? What was the ratio? 3:2:1. So that would be 3/6 for David. So for David is 3/6 multiplied by 951,000. Stella 2/6, 951,000. Percy 1/6 multiplied by 951,000. Okay, so let's do them. You can actually do these things in the adjusted profit side before then you come and slot them here. However you want to do it. So 3/6 multiplied by 951. And that gives me 475,500. All right, then the second one is 2/6. That gives me 317,000. Then the last one, which is 1/6, that gives me 158,500. So basically that is that. All right. And we have their salaries. Salaries 48,000. So these are copy and paste before, because they were before item. All right. So copy and paste them. We have interest on capital, and we have cost of traveling for leave. He didn't do it on behalf of the company. It was leave he went to. So 20,000, 30,000. Yeah, here is 72. Just copy and paste. What a question for 7 marks. 30,000. Here we have 96, 10,000, then 25,000. So all we need to do is to add them up. We are done. That is the accessible income. That's all. So let's add. This one will be added to 131. You could see the totals are already here, so you don't have to point things one by one again. So 289,500. I'm done for this. If I pick this one, I already have 475. I'm just adding the total here, 98. That's all. 573. Then I have 317, and I'm adding 122. 439. That's the end of it. So the examiner can be gracious sometimes. So you just did this for 7 marks. That's all. That's all. All right, let's come here. The next one in November 2020. So it means it came in May 2020, then November 2020. All right, yes, we have Shika, Bekwai, and Senna, who are in partnership, agreed to share profit or loss in the ratio of 2:2:3, respectively. During the year ended 31st December 2018, their book showed adjusted profit of 210 after. Okay, this is after. All right, and we told you that salaries, you can't pay yourself salary. You can't, so it means they have already done all these things in determining this profit, which shouldn't be. All right, then it says that Shika is married. All right, Shika is married with 2 children. So it means that she will get those reliefs. Do you remember? Those reliefs she will get. With 2 children who are in school and maintain 2 dependent relatives who are more than 60 years, on which she spends 10,000 annually. All right. We are not interested in the money she spends. We are interested in the relief she will get. Shika also has life policy assurance. Okay. And the capital sum is 1.6, but the premium over the annual premium is 1,008. Okay. Then what else do we have? We have Bekwai undertaking a 2-week training program to update his knowledge on how to manage accounting software. He has spent 1,005. All right. On the training. So how to manage accounting software used in the partnership. Okay. Used in the partnership. All right. That is that. Bekwai received a television as a gift. Television as a gift. So all those things we learned in what do we call it? The individual income tax comes to play. They all come to play. All right. So he received a gift, and the gift is valued 3,000 for being the best worker in Ghana. Sana is 62, unmarried, but has 3 dependent children, while Bekwai is also unmarried. So you are supposed to find each of these people's accessible income. All right. Accessible income. But if it is accessible income, then it means that there's no need for us to talk about the reliefs in the question. Or some examiners are tricky though. If we are doing accessible income, we don't need to do the reliefs. We only do the reliefs when you are looking for chargeable income. All right. So you just have to be careful. You just have to be careful unless there is an error in the question. Yeah. Unless there is an error in the question. Accessible income, we don't do reliefs. Okay. Unless the question has said actually compute chargeable income. But we will go ahead and do it just for you to remember some of the things. Okay. It's interesting. All right. Okay, so we're going to go on and actually, but the question told us something that during the year they did this after that. For me, that is the striking thing. That must be after accounting for the following. Okay, so if this is the following and we are giving additional information, probably these things are not part. All right, so basically that is that. So let's adjust our profit. Let's go ahead and adjust our profit. So we have determination of adjusted profit first. Is 210, right? We have to add back these things, the salaries. See, when what we are doing in this add back means it was deducted, so we are adding it back, and it will zero it off, so that we will be allowed to actually treat the salary in their individual places. Okay, so that is basically what it is. Now, how much is the salaries? It's these people's salaries. So we have kind of a 70 plus 80, which is 150, right? Then plus another 150. So we are adding back 300,000. So that is the meaning of that. We also need to add back the interest on capital. You need to add it back. But you see, like I said, in some of the exams, suggested solutions of the ICA people, they even don't do the add back for these things. They don't. And they give it as an alternative answer, which I have a problem with. Okay, anyway. So here is 12. You add it to this, you have what? 38. 38 plus 12. This is 28, sorry, 28 plus 12. That is like 40. So let's add back 40,000. This one also gives us 10,000. So we will add back partners drawings. So all those things, so this is 20,000. So which means that properly our adjusted profit is, I have this one will give me 510, 550, then 570. So this is the real adjusted profit. I think I saw something over here. So he says that Bekwai is undertaking a 2 weeks program to update his knowledge on how to use the account. You remember we said that any services rendered to the entity, you also do something about it, because in a partnership you cannot employ a partner. All right, you cannot employ a partner, and so therefore, if you have something like this, unless we are assuming, so we can put there assuming it is already adjusted in this, because the question said all the following had been done before we had the other information. So it means that this money has already been catered for, probably already. So we can, and please, whatever assumption you make, write it in the exam. Write it, all right? Write the assumption. So here we have and don't forget, these days we don't, in the new act, we don't do anything on life insurance policy in this employment income. All right, you ignore it. In the old law, we used to calculate. All right. So now, we used to do something about life insurance policy. If somebody has done a life insurance and is paying those premiums, it used to be an allowable deduction in the old law. All right. So now, what do? We come here, we had Shika, Bekwai, Bekwai. And Senna. So we will do computation. So instead of chargeable income, accessible income. Let's just do computation of, well, yeah, let's do the requirement of the question first. Then we chip in those things we learn under the individual income. Those things we learned, if the person had gift and all those things, they are all part of the accessible income. But the reliefs, we will just mention them. Okay. So accessible income. The year of assessment we are looking at is 2018, and the basis period will be 1st January 2018 to 31st December 2018. Of course, like I said, from here, you can do the share from here. So share of profit, the ratio is what? 2:2:3. That is 7 total. So the first person will get 2/7, second person 2/7, third person 3/7 of this 570. Okay. So let's do it. 2/7 by 570 gives me 162,857. So this one too will be the same, 162,857. Then here will be the difference, right? So that one will be 240. 2, 4, 4. Then I have 286. All right, so that is that. So this is what we are sharing. That is what we are sharing. So we will begin with share of profit. So like I said, CA may decide not to add all these things back, but probably this one there, you have to add it back. But these two, they may decide not to add it back. But it's the same. It's just that this is purely what the law wants us to do. So we have who? Shika, Bekwai, and we have Senna, right? Okay, so here we had 162,857, 162,857, 162,857. Okay, so that is what we have. So the salaries we went to negate, mind you, it was treated as a negative before. We have gone to add it back to zero it. So now, what do? We now bring them salaries. All right, salaries. So 70K, 80K, sorry. Then 150K. All right, so that is that. That is that. Then we have interest on capital. Okay, what do we have? 12,000. Remember what the law says, and any related loan they give to so it means that they taking interest on capital means that they gave the capital to the entity as a loan. All right. And here will be what? 16,000. Then this one will be 12,000. All right. So that is that. Then we come to this one. What about the partnership drawings? Drawings. So what is a drawing? Is a drawing an income? Okay, because it's like they took something from the partnership, like let's say they took cash from the partnership. Then what do? We added it back because the cash that they took is kind of a loan. They've taken something from the company and they deducted it. So we had to add it back. Is that okay? We had to add it back. Now the question is that if you have added it back and you had zeroed, do you have to treat it as an income they have earned? No. Why? Because it's a drawing. It's like you can't tax a loan. Okay, you can't tax a loan. But in terms of adjusting the profit, you have to add it back to get the proper profit. All right. So basically that is that. So now we can total this. All right. Then when we go down there to add the gifts and things, okay, or you can also add it straight if you want. Okay, so we saw that somebody had received a gift. A gift. So here we come here. This part is a relief. And how much is the relief for marriage or dependency? As at this date, it used to be somewhere around 200. But now, if you are solving this question, I think you have to put 1,005 there. Right? So be careful. Be careful. Then it says that he had life insurance. Like in the old law, in that is the 2001, you would have done something to this annual premium that he's taking. All right. There was a whole computation on this. You use this figure and you will also see it there was kind of it should not exceed an amount 5% or something. Yeah. So you compute it and compare and you deduct whichever is lower. Yeah, so here we ignore it. Under the new law, there's nothing we do to this. All right. Then Bequai took mortgage. Okay, so Bequai took mortgage for this per month. He's paying. So mortgage interest is allowed for one house, if you remember. One house. Okay, one house. So if the mortgage interest is this per month, we are doing this thing for a year, so you would have multiplied it by. So we will do it. I'll just add it to the reliefs. Okay, so this one too is doing some training. Okay, and that training is developing him personally. But the trick here is that he's doing the training not for himself, but for the what do we call it? The entity. So this 1,005 actually had it not been that the question has said that all adjustment has been after arriving at all adjustment, we should have even treated this thing as an expense and deduct it from the adjusted income. Yeah, so basically that is that. So if you make the assumption that this was not deducted, then you will deduct. But if you made the assumption that it was already deducted, then that's it. Yeah, this is what I was looking for. Bequire receive a gift. All right. So if you receive a gift, it's part of your income. So let me use what is legal because we read that you have to share under each and every any employment from what the partnership, any income from what the partnership did is separated from any income the person will be getting from somewhere. So what I want to do is to actually do this side only. Okay, so we will have 162, for example, 857 plus the 2 here is 82,000. So I'll have 244 857. Then this same 2, I have 162 857 plus the 2 here is 96. So 96,000. That one also give me 258 857. All right. Then this side too, what do I have? Whoa, how did all of them become? One of them's own was greater. Oh, sorry guys. So this thing is supposed to be 244,286. All right. So 244,286 plus. So this one will give me what, 162, right? Plus 162. So here I'm having 406,286. All right. So basically that is that. Then the guy who received the gift was Bekwai. So Bekwai received an additional gift from employment of what? All right. This one too is a relief. So reliefs, if we were to go ahead and do their chargeable income, this is the accessible income. This ends the accessible income. So this will be 261. Eh? Yeah. So right now we are good to go. So if we wanted to find, we wanted to do the chargeable income, then we will less some of most of the reliefs. So you start from the top. And it says it talks about Shika. So what is this part is the part that, guys, is something that you have done before. So it is the part where you should have all those things at your release at your fingertips. The release should be at your fingertips. So now, if you look at the first one, our madam, Shika, is it a male or a female? Is married and she is having 2 children. So married plus additional 2 children. We call it marriage and responsibility allowance. Yeah, marriage and responsibility allowance. So that one is how much? 1,002, right? It's 1,002. Okay. Old age is the one that is 1,005. So marriage. So you say marriage relief. In the old law, it was 200, but now, since you are doing the question now, but if you were to have this same question in 2018, you apply the 2018 one because it changed from 2021. So in 2018, it was 200, but please, let's use the current figures, okay? Because you are not going to write 2018 paper or 2020 paper. All right, so here will be how much? 1,002. Who is Shika? So you will be less than 1,002. All right. And she also had, well, 2 dependent relatives. The dependent relative, one be 1,000. So dependent relative, 1,000. So she will have the 2,000. Then it says that 2 who are in school. All right. So if the school is a recognized school in Ghana, this child education, that is 600. So if he has 2 children in that, it will be what, 1,002. This woman is getting. And like I said, here we don't do anything about the life insurance policy anymore. Okay, because we would have done a percentage. I've forgotten. We would have done in the old law, we would have done a percentage of this, say 5% or something. So yeah, so let me say 5% on 1,006, 1.6. That is even so it's something. It should not exceed some amount. Yeah, we would have done that and compare it with this. This the sum of something, and compare it with this one and pick whichever one that is lower or something like that. But here, uh, we don't. It's not part of the release in the new law. All right. The new law started in 2015. Okay, and it says that Bekwai took a mortgage. So Bekwai will have mortgage relief. And mortgage relief is given to one property only. And it is 4,000. So 4,000 per month. So for a year is how much? That is 48. 48,000. That is for Bekwai. We've done the gift he has received. Bekwai going for a training. Like I said, the training in this case is used to be how much was it then? I've forgotten, but now it's 2,000. The allowance is 2,000. All right. So the question is that did he do the training for himself? Herein, he's doing the training for what do we call it? The company it is working for. All right. So that is the caveat. That is the caveat. So we can also make the argument that apart from the fact that he's doing that, he's training himself. So you can put here, please, the training is now 2,000. So you can say training, even though he's spending 1,500. Training, who is doing it? Bekwai is another relief for 2,000. So you just slash them in. That's all. Senna is 62 and unmarried, but if she is 62, then old age she will benefit herself. Old age, she is the old age, and is unmarried, but has three. So she 3 children. So she will get the old age and the marriage. So the marriage, Senna will get some. Then she will get old age. Old age too is 1,500 because she is above 60 years. All right, so this is it. So finally, you can get your final answers. You pick the figures, you deduct. All right, so ladies and gentlemen, that is how it works. All right, just that. So you finish up the figures. All right, finish up the figures. All right, but most of the time when you are asked, so this is it, what you have done. Casual, you said that what the partnership business has some casual workers. Casual workers, what do? You charge a withholding tax of 5%. Temporary workers, what do you do? Temporary workers, you add it to their graduated, you do a proper pay for them. So you add it to their graduated income and tax under the pay. And it also says that they have a part-time staff. Okay, so for part-time staff, what did we say? Withholding tax of 10% if the person is a resident and 20% if the person is a non-resident. All these things are in employment income. So you see, they combine it together. Shika is an international woman who travels often. There is a confusion in 2018 as to whether she should be taxed as a resident or non-resident. What constitutes a resident individual for a tax purposes? This thing, you have to memorize it. All right. Do you remember section 101? A citizen, other than one who has a permanent home outside Ghana and stayed in the permanent home throughout the whole year. Okay. Then somebody who has been present in Ghana, all right, for an aggregate of what? 183 days within it's an aggregate 100 within the year of assessment, all right, at so at any time in a 12-month period that begins or end in that year of assessment. We have we said that if a public official is posted outside of Ghana or abroad, all right, so that one too is a resident. Then we also said that the citizen who is temporarily absent from Ghana, okay, but his temporary absence from Ghana is not exceeding 183 days, okay, 183 days. All right, where that citizen has a permanent home in Ghana. So those are the things. Please, section 101, memorize it. All right, just memorize it. Then we have this question 3.2. So what do we do in this question 3? Amma and Bean are brothers, an equal partnership, which means their share is 50-50. All right. They are operating ABC General. Okay. The partnership is in the second year of their trading. And it says that and operates from an office premises owned by Amna. Hey, what name is that? Amna. Okay, so it means Amna is using his property for the partnership. We said something about that thing. Okay, so as at the time the person is using the thing as his you have to value it and let it stay with the partnership. The cost of the premises, yeah, so we'll be giving the cost. So this is it. So being provided all the office furniture, the other one to also provided, and this is his contribution to the capital. All right. Okay, so that is that. And said that Amna and Bean use their own their personally acquired motor vehicle for the partnership businesses and charge the partnership business for mileage incurred for fuel maintenance. Oh yeah, they should. The cost of the motor vehicle is 120, and the partnership has employed 3 staff in addition to the partners. The partnership income for the year of assessment 2020 is what we have in there. Okay, so there is income, there is distribution expense, there is administrative expense, there is other expense, and you have this. And they said that the distribution expense that you see there includes motor vehicle running expenses, third-party motor insurance and licensing, parking fines, and business mileage, the one that we were told that they've been using the entities this thing for. Okay. All right. So we have that. All right. So that goes into it. So it tells you that it is from the car that they've been using for the entity. All right. Then it says that administrative expense comprise of salaries. So you see the thing of salary over here again. So the salary they have here is how much? 160,000. Cleaning and sanitation. So it includes it. So you see here, we have to be careful because they said they employed 3 new staff. So this salary, is it for the 3 new staff or for the partnership? If there is no note to the fact that this thing is for the partners, then we assume that it's for the 3 people. All right. Cleaning and sanitation, income tax paid in arrears penalty is also here. But how can you treat a penalty as an expense? That's bad. Though. Electricity and water, depreciation. Depreciation is a non-cash item. And herein, the tax people don't allow your depreciation. So we will have to add that back. So we will add this back. We will add depreciation also back. Payment for operating a business permit, yes, it's needed. Then these ones too are cool. So it means that well, we will be adding back certain things. We will be adding back certain things. Like this business mileage thing. We have to add it back. Yeah. Because if you remember, services rendered to the partnership is not part of the recognizable what do we call it? Recognizable expenses. All right, in the partnership. In the partnership. Don't forget those things. Those things are the law. Those are the law. If you forget them, you'll be in trouble. But rather, we said that those things are treated as monies they've earned from the partnership. All right, so that is that. And this one too is a fine. It's not a parking charge. So if we allow people to deduct fines like tax, all those things, that thing will be bad. All right. So that is that. Other expenses comprise of penalties for late filing. So like this, how can you treat penalties for late filing as an expense? And we will do more of this in business income. All right. So we have Amna and Bean are both married. Okay, so this part is just basically talking about their relief part. Both are accredited. Those 2 children are in accredited schools in Ghana. Bean has 1 child who is currently attending University of United Kingdom. Please, it's not in Ghana. Ignore the person. Amna takes full care of her age, so age dependency. All right. Obia It's only her mom, so just 1,000. Being who is currently undertaking a training course in wholesale risk is certified as handicapped in one of, okay, so this one is disability allowance. So it means that 25% of the accessible income for her. All right. Being paid 3,000 for the training that she is doing. We are not interested in the money they pay in their training. We are interested in the relief they will get. The relief is just 2,000 per year. So explain the principles governing. Okay, so what are the principles? Partnership don't pay income tax. You remember that. No credits to them. Profit or loss are shared. What else? In accordance with their profit sharing ratio. But they pay withholding tax. All right, so you say one or two things, then you go. Calculate the joint partnership taxable income. So that is, you are required to include capital allowance where necessary. So if that means that if we have to compute capital allowance, we will have to compute the capital allowance ourselves. That is it. But I don't think we have enough assets to talk about capital allowance. It says that calculate the taxable income of AMNA. Okay, so we will do that. What are the tax on casual is 5%. Temporary, you add it to their income and use the graduated tax scheme. All right, so that is that. Okay, so what do you do? So let me show you the adjusted. So that's the B part of the question. So you will have to do computation of what? All right. So what is the name of the partnership? AMNA and Being. So it says that let's compute computation of joint partnership income. We have the year of assessment to be 2020. Then we have the basis period to be 01/01/2020 to 31st December 2020. So what is the, so we start the net profit per the account. Is how much? 250,000. Okay, so we have to add back certain things. Notable among them, quick, is depreciation. So you can close your eyes. Depreciation is 160. You add it back. We were told of certain things to inside these ones. They said that motor running expense, of course, motor running expense is please, that is section 9. Learn these things from the business income video. Those expenses that if you don't incur, the business will not go on, are allowable deduction. So if they deducted, let them deduct. Third-party motor insurance, of course, if they don't do that, they can't even use the car. Parking fines, it means they didn't park well and they were fined. So that is on them. Parking fines. You are not supposed to be getting advantage of offenses. So you add back. All right. Then the business mileage. Don't forget, we said that you cannot, what? It is not allowed for you to get from the partnership services. That, so mileage claim. So AMNA. So this mileage claim, after we have added it back, it is an income to them when we share the profit. All right, so this one was 24,000 and this one is 20,000. All right, so that is that. Then let's see inside the staff salary. Like I said, they employed 3 other people. So you can't say this salary was for the partners unless the question has said otherwise. Cleaning, yes, every office we clean. Tax pay, income tax paid, arrears and penalty for, why will you deduct that one? So income tax. For 2018, you are coming to deduct it from 2020's distance with 8 penalty. No. So add back 8,000. Electricity and water, yes. Depreciation. I thought the depreciation we had an amount of 100 and something thousand already. Oh, that was distribution expense. Okay, sorry about that. So it means that what we should add back here is actually 23. All right, so that is that. Payment for business operating permit. Yes, every business pays operating permit. Then, yeah, printing and stationery. Then they said that included in the other expense comprise of penalty and late filing and so that other expense penalty, we need to add it back. How much is the other expense? 30,000. So it has to be added back. All right. So we get our proper profit. So what is our proper profit? So this is 250 plus 23 plus 23 plus 6 plus 24 plus 20 plus 8 plus 30. I'm having 361,000. 361,000. Then capital allowance. How much is the capital allowance? So capital allowance. Oh, there's no capital allowance even here. Oh, okay. We have to compute the capital allowance ourselves. Yeah, we have to compute it ourselves because they have some assets. This is tricky. Very, very tricky. So the capital allowance, how do we compute the capital allowance? Of course, we can calculate the capital allowance ourselves because they had some assets. So you've learned capital allowance already. So let's go and do our capital allowance as a working. So computation of capital allowance. So we have Amna and Bean. So capital allowance, the same thing we do, year of assessment. What is our year of assessment? 2020, right? We were preparing everything in 2020. So capital allowance 2020. But the asset, when did they start giving it out? They gave it out with date. Okay. 1st January. 1st January. So we will start with 2019. Wow, I love this question, which means you do the capital allowance. You have to be careful. You have to do capital allowance for 2 years. We are doing the thing we are doing is for 2020. So you have to come and do the capital allowance for 2019 and also get to 2020. So you have to be very, very careful. See how tricky these examiners are now. All right. So how many classes of accounts do we have? Premises is when? Is class 4, right? Yeah, note that. Then office furniture and things are what? Class 3. Is that not it? Yeah, office furniture is class 3. They also have a motor vehicle. Motor vehicle is class 2. So we have class 2, class 3, and we have also what? Class 4. So class 4, normally we don't put the name, we put the asset. So we don't put the class. The asset is what? A premise. Premises. So what is the cost of these things as at these dates? This one too is January. So that's why 2019, that's why I put them there. If it were to be in 2020, you just do 2019. When you get to 2020, you do additions. So the class 2 is 120, right? The F&F is 80. Then the building is 200,000. All right. So what is the capital allowance for 2019? This thing is 30%, 20%, 10%. This is from the knowledge of capital allowance. So 30%, 120 by 0.3, 36,000. 20 by 80. That gives me 16. Then 10 is 20. All right. So our WDV, carry down. How much we have? This one will be 64. This one, I believe, 198. Then this one is how much? 120 minus 36, 84. So that is that. Then we come to year of assessment that we are preparing what we are doing for 2020, with the basis period being BP being 01/01/20 to 31/12/20. So WDV brought down 84, 64, 198, 198. So there is no addition. If there is addition, we add. If there is disposal, we dispose. So now, and mind you, I did the 30/30 because the thing was from January. If it was somewhere, we will count the days and do that days over 365. Please be careful. All right. So what do we do here? 80. We have 84, right? So 84 multiplied by 0.3. Don't forget it's reducing balance for class 1 to 3 asset. So that gives me 25,200. So I have capital allowance here. Then this one is 20%, also reducing balance, 64 by 64. I have 12.8, so 12,800. Then this one is class 4, it's on cost, so it will still be 20,000. Meaning that my capital allowance for the respective years, this one, I had 36 plus 16 plus 20, that is 72. Then this one, I have 25 plus 25.2 plus 12.8 plus 20, and that gives me 58. All right, so it means that 2020 year of assessment, my capital allowance is 58,000. So I'll come and slot it in here, 58,000 minus 361. I get 303. So this is the profit they've earned. I'm going to share now. So you see, it's not always cool, calm like that. You have to work. You have to work. So let's go in here and come here. So I think the question was broken down into pieces. And if you're able to do this one, you will have how many marks? 12 marks. Yeah. So it's like a capital allowance question you've done. All right. So this part gives us, so we are supposed to compute the taxable income. That is the chargeable income. So we have AMNA and we have BEAN. Computation of taxable income. The year of assessment we are doing this thing for is 2020. The basis period, therefore, will be 01/01/20 to 31/12/20. All right. Then we have who? AMNA. We have BEAN. Share of profit. is 50-50. They told us it was equally. So this one will be 50% of 303,000. 50% of 303,000. Okay. So how much is that? So 303 multiplied by 0.5. 151,500 for each one of them. So 151,500. 151,500. All right, so that is that. Don't forget, they have some claims. We said that. We said that. They have some claims. So that is that. Those claims, this is where you bring it for them. So the money that they took, claims. All right, this guy's own was 24, and this one was 20. So it's an income to them. All right, so that is that. If there is any other thing we add, I think that was it. So we can total this one now. Okay, this one should give me 151, so 175, right? Yeah, that's what it should be. Then this one is 171. All right, then you know they have some reliefs. They have some reliefs. The marriage/responsibility. So we go there, you do the reliefs. These people are both married. So if you are married, you have two children. So if they are both married, 1,002 each. All right. If you are not married, but you still have two children on you, then that's fine. Amna has two children. Both are in accredited senior high school. So child education. So that is Amna. They are two. So it will be 2 by 300, 600. So that one is also 1,002. This one also had a child, but they said that she's attending a school in UK, so it's not in Ghana, not recognized in Ghana. All right. And it says that so being had one child, blah blah blah. Amna takes full care of her aged mother. Aged mother, one aged responsibility is 1,000 per each. So this one that is one, you will give her only 1,000. So that is what will happen. This one doesn't have any. Bean is currently undertaking a training course in wholesale risk. So training, Bean, 2,000. Please, the training is not for academic trading. No. It's not like you are going to school and you are going to do BSc. This is a risk. It's a professional thing. All right. So that is that. In its handicap, so that is disability. Disability is 25% of the person's accessible income. What is accessible income? 171. So imagine you had all those things wrong. 171 by 171 500.5 by 0.25. Imagine you have those parts wrong. It means that you get this part too also wrong. That is giving me 42,875. So she'll get that one too. So after that, just total them. So if this one had 175 and we are lessing 175,000, we are lessing 1,002 minus another 1,002 minus 1,000. This money will be 171,600. All right. So that is what he will have. Okay, so 1,002, 1,000. Oh, 1,002, 1,002 minus that. That is okay. I think I've made a mistake here, right? This is 500, so there should be 500 here. There's a 500 here. And so this one will mean that it should be 175,500, right? Pardon me for these errors. So it will be 172,100, the balance of the man, 172,100. So this is 172,100. So basically that is that. Then this one too had 171,500 minus 1,200 minus 2,000 minus 48, oh, 42,875. So that is giving me 125,425. Is that it? All right. My calculator is showing me 48 something. So what did I write? Let me point it again. 0.25 by 171 because 171,500, right? Yeah, that's correct. It's 42,875. 42,875. So that is what it is giving me. 171,500. That's it. So this is fine. So we are done. All right. So basically that is that. So ladies and gentlemen, this is how it goes. You see how they can bring capital allowance inside these things we do now. Okay, so be careful. Be careful. All right. So now let's move on. We have solved all these past questions. I think that the lecture is extended now. There's one last for you to do. So you have to make sure you apply everything that you've learned. Okay, so this one says alum, they started in January, they produce hair product, they agree profit and loss equally. So that is that. The annual salaries are this: interest on capital 5% per annum, depreciation. Okay, so 2018, 2019. So if you are to do an adjusted this, then you add back those depreciations. Okay. Capital contributed by partners. These are their capital. What is the form of the capital? If it is in the form of asset, don't forget you'll be doing capital allowance for that. All right. So that is that. So if they say they charge interest on capital was deducted from the profit, what was the capital? So ladies and gentlemen, these are things you have to be fast to do. Okay, and their profit, this is it, 500,000. So it means that you have to do the adjustment on their profit first. All right. So these things are in years. So we have 2018. I'm just guiding you. I will not be solving this. Then 2020, right? So you have to first adjust the profit. Let's look at the requirement. Oh, you are supposed to do chargeable income for 14 marks for each of the following years. Okay, so if that is the case, what do you do? They said that we have this to enable the partner, they introduce a new person on this date. That is the beginning of the 2018. So it makes it 2019. So it makes it a little easier. Now receives salary. Please, salary, you have to add back in addition to the equal share of profit. So it means when they join, they still share profit equally. So it means that there will be decimals in it then, because these 3 people, he will not be entitled to interest on his capital. No problem about that, because there's no need to even be calculating that. He was elected as a member of parliament and resigned from the partnership. So the following year, 1 person too left. You see, this is a typical example of what I explained to you in the other part. Capital allowance of 60,000 has been granted for each year of assessment. LNM received rent income net. Okay. The rent income is subjected to withholding tax. All right. So please take note of that. And it is a final withholding tax. So there's no need to bring it in. All right. So per annum during the period so you can't bring the rent income as his additional income. All right. So because rent is with final withholding. None of the other partners had any other income outside. Yeah, so that is that. That is that. So if you are to learn to adjust the profit, like I said, the question, how much do we have? Profit or loss? How much is that? 500. Can we put some zeros somewhere? These zeros are plenty. So please, you can put zeros be somewhere. So here will be 500,000 then. Then here will be, it's a loss. So please, I told you in the old law, we used to roll over losses, but these ones, it doesn't matter. You share them too. So 180,000. And this is 1 billion. Imagine. Then we say you add back depreciation. Depreciation, you don't waste time. Where was the depreciation for each of the years? Is 80. This one is 60. Just add them back. Then this one is what? 180. That's all. Not only that, they said they took salaries. So salaries to add back. So the salaries, you go and add it at the share when you are sharing them. Okay. So this one is how much? Salary, alum. So I should have put the, okay, this is not the sharing. So combine them. Say annual salary. So that's the same figure for each year. So it says that agreed salary, yeah. So annual salary, this one is how much? 10,000. And this one is 14,000. So it means this year it is what? 24,000. So you have to deduct that salary from it. All right. Is there any, so it is annual, unless they tell you that this salary increase somewhere. So as far as 2014 is concerned, so this is it. So this one, you have salary 24,000. 24,000. Okay. So now they now told you that this madam here also received another salary annually. So salary again. This is for Elinam. So her own is 6,000. So any salary, and it is in 2019. So that's why I added it over there. Okay. Any salary a person earns in that regard, that is how you are supposed to treat it. All right. That is how you are supposed to treat it. All right. Which means that when did she join? She joined this. So 2016, and they are telling us that this woman also resigned. So if she resigned, then when did she resign? 30th June, 6 months. If it is 6 months, then it means that she won't take the salary for the year she resigned. So if they take salary, who is that? Elom. Elom is 10,000. The salary is 10,000. So half the year she was not there, the salary will be 5,000. Is that not it? Half the year she will not be there, her salary will be 5,000. So you have to be careful. That's the 2020, right? So if the salary Elom is 10,000. So if the salary, she resigns and she will not take the salary, the 24,000 should be reduced. Okay, so she will not be there. So we have to reduce it by 5,000. Is that not it? Because she will not be there. All right, so that is that. So that means that the salary over there should be reduced to like about 19,000. And this woman that came, whose salary is not added here, you add her salary here. All right, so that is that. So you have to be careful. So this, this 24,000 was for the existing two. When this woman came, she took salary of 6,000 for this year. She was there in the following year, so that one too will be there. So you have to deduct all those things. Okay, so just be careful. Just be careful. All right. Is there any other thing? Is there any other thing? Or if you want, you can do it one by one, year by year, so that you can assess it well, because it's a little bit tricky. If you don't take care, this thing can beat you. All right, so that is that. Then the interest on capital. Interest on capital. Did the person who came in also introduce capital? And if she introduced capital, how much was capital? So this one, they said that these people introduced some capital, 1,000,000, 100,000, and the question told us that their interest on capital is 5%. So the first person, so that is what they are charging each year. So the first person is 0.5 by 100,000. I put the zeros up there. So it means that for this one is 5,000 a year. This my orga here. So let's put it somewhere, 5,000. Then the other one, it is 80. So 80,000 say 4,000. So it means that every year, 9,000. But it looks as if one of them left in the final year. So when you get there, be careful. Just be careful. So I have 9 million, which is 9,000. 9,000. 9,000. And please, the other person who came, did she also bring in capital? Yes, she did. But they said that she was not entitled to interest on capital. So that is that. So this one, you can write the 9 million, but understand the fact that this interest of capital, who was that? Elom. So Elom is the first one. This money that she brought in, she left half of the year. So it means that in this part, we need to less half of the year from that. So less half of the year, which is 2,500. Because she was not there, so she wouldn't be there to be receiving those things. All right, so basically that is that. Yeah, I think that is there any other adjustments? Capital allowance was each year. Rent income there is subjected to final withholding tax. So the net is the net. It won't come into their income tax at all. It won't come in there. All right. So you can close this, close this, close this. All right. Then total. If I'm to help you through it, it will be 500 plus 80 plus 24 plus 9. Right? So this one is giving me 613. So we will be lessing capital allowance of 60,000. And that will be how much? 60,000. That will give me 553. All right. So basically that is that. Then capital allowance run through, they said it's annual. 60,000 annual. So you add this part 2 up. So it's minus 180 plus 60 plus 24 plus 6 plus 9. So I have 81 for that. And there is a capital allowance over there. So this is minus 81,000 minus 60. So you see how that one will be. So that one will be like minus 141. So just be careful. Be careful about this thing. This thing is interesting. So we have 1 million. plus 180 plus 24 minus 5,000. So minus 5. I'm taking all the zeros. Plus 6 plus 9 minus 2.5. So that one too is giving me 1211. 1211 500 minus 60. That gives me 1151. Another call. Sorry. All right. So basically, we've gotten the adjusted profit. So when you finish, you have to be careful and do the accessible income or the chargeable income, because so let's say you do computation. Let me just finish it for you guys. Computation of chargeable income. All right. So you do your year of assessment, which means that the year of assessment is going to be changing. You'll be doing for like 3. So BP. So this one will be 2018, right? Then the BP will be 0101 2018. Then you start doing for the names are Elom. So you do here Elom. You do here Aram. Then Elinam. We put some 300s up there. So do the same thing. All right. Then share of profit, the first item. They share it equally. So for the first year, I think they were only 2. So equally for this, for the first year, they were only 2. So 553 divided by 2. Everybody will have like an amount of 276,500. So this one to 276,500. So the LLM person wasn't there in 2018, so you can even ignore it. All right, so that is that. Then the interest on capital they were getting and their salaries. All right, and their salaries. Okay, so how much was their salaries for 2018? I think each of them, it was 24,000, and one of, yeah, so this woman, the first one is 10,000 and the other one is 14,000 for the salary. So 10,000 and 14,000. Okay, so that is that. This is 500. All right, then the interest on we did it somewhere at the top. So the first person was 5,000. The third person, second person was 4,000. So 5,000, 4,000. All right, we are told that this Elon had money somewhere, but that I've told you, this one, the money she had somewhere it will attract a final withholding tax. So the net will not come into her income again for assessment. So please, that is that final withholding tax. We don't bring it into the person's computation again. So this woman, you will add, so 276.5 plus 5 plus 10. This one is 291,510. So that is what I have. 291,510. So basically that is that. All right. Then how much do we have? Oh, this call again. Yeah, so I'll call you back. All right, let's continue. All right. So let's what am I saying? Okay. All right. So let's continue. I just spotted something, a capital allowance. Yeah, 60,000. Yeah, Okay. So how will I let you guys correct this? Because it looks as if I placed zero zeros at the top here, and this one I've just didn't place the 00. So how will I even? So guys, when you are doing it, just do the correct thing. Okay, so you can add the 00s. The depreciation, where is it? It was given to me at the top here. Okay, so that one, since the 00s, if I were to take it off, then it means that I should have made it 80. What about this one? The 5% on their, I think that one should have the 00s back. So 0.05 multiplied by 100 to 3. Wow, 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 wow. And this one, it means they should also have the 00s. Okay. So it means this one should also have the 00s. Now that we are taking it off. The salaries. So it means this depreciation of 60 should be maintained, which means this one we should have our 1 billion back. Interesting. This one too should be negative 180. 180 billion, 180 million. So 180 million. Yeah, so this one was 500 million. Wow, interesting. So that is how it should be. Depreciation will be maintained. Then the salaries. This one, what are the salaries? Annual salary. So if annual salary 10 and 14 should be 24, 3 zeros should be added. Oh, this is a distortion. Serious distortion of figures. So it means that this wants to have the 00. So this do the same, and this woman's salary to the same, because the woman that came in was 6 million annually. So will it affect the figures here too? Surely, I think it will. So it's 500,000. So I'm punching it like 500,000. So I'll add only 80. Then I'll add 24, 3 zeros. That will be 24,000 plus the 9 million, also 3 zeros. Okay. So that one is giving me over here 533, 080. Then if I less 60, because I kept zero somewhere, this answer should be 533. So guys, just be careful. And I think the cost too are part, the distraction of the cost. So this is what we have. So if we are sharing this thing among the two people, it means that this side we are having 266,510. 266,510. All right. Then the capital allowance, interest is 5 million, right? So this, I think here I can maintain my zeros. Then be careful going forward. I think the interest was 5 billion, so I can maintain that. Then the salaries do the same thing. So if I do plus, the answer that I have plus 5,000 plus 10,000, I'm having like 281 510. So that is what I'll have with my 0 zeros up there. So I have 281,510. Okay. So here to be how much? 266,510 plus 4,000. So the zeros will be kept out there, plus 14,000. So this is 284,510. So that is what I'll get. All right. So let's do the remaining corrections over here. So what will happen to this side? So this side will be minus 180. Okay. Plus 60 plus 24,000 plus 6,000 plus 9,000. So if I'm keeping the zeros in there, that is how it will be. So that gives me a total over here of like 141,940. So that is what I have here. 141,940. 141,940. So that is what I'm having over here. Okay. All right. Then the next thing is to tackle the capital allowance. The capital allowance there is 60. So the answer that I've gotten, okay, the answer that I've gotten, I will just do minus another 60. So that will give me, oh, that one is correct. Interestingly, it gave me 141,000. So that one is correct. So how? Okay. Okay, so it means this thing that I'm getting is in, yeah, because we have canceled the zeros here. Interesting. All right. Then let's do the last part too. So that one will be 1 million. Since I am still punching it the other way around, this will be 180 plus 24,000. All right. Minus 5,000 plus 6,000 minus plus 9,000 minus 2,500. So I'm getting this one. So this one too is wrong. It's 1,031,680 with 3 zeros. Then I less 60. So here too, my answer here is actually 1,031,620. 620 is extra 3 zeros. So basically that is it. So if I do this, that is what I have. All right. This question doesn't have reliefs for the people. So basically you can finish the 2018 one like this. It's completed. All right. That one is completed. Then I come to my 2019. Please write year assessment. I'm just afraid the video is prolonging. That's my worry. So this PB 0101 to 30th 12, all in 1919. It's just that here you have to be careful. The people increase. We have Elam, we have Aram, then we have who? Elenam. So the profit you had here, we've adjusted here, 141. That means that there are 3 zeros, okay? It means here there should be 3 zeros. It should be like this. But since we are doing it and I'm putting the zero, I put the zeros up here. So let me put it on here. So please be careful when it comes to the zeros thing. So the share of profit is 141,000. Since I have the zeros, and I'm dividing it equally among them all. So what will it be? Divided by 3, I'm getting 47,000 for each share of profit. So 47,000, 47,000, 47,000. And don't forget the interest on capital. Okay, it was an annual thing. Their salary too was an annual thing. So it's the same thing, 5,000, 4,000. Then this one too was 10,000 and 14,000. And the woman who came in also came in with her own. She was taking 6,000, 6 million, so 6,000. That's all. That's all. We are done. So you total that one too. All right. So be very careful and just total that one too. All right. Because she joined in the beginning of the year, it is simple. But if she had joined in the middle of the year, what would you have done? Would you have splitted the profit before we do the sharing? I think the last one left in the middle of the year. So this one, it will be 57 plus 5, which will give us some 60 what? 57 plus 5. How much is that? Let me use calculator to punch. So it was a loss. Forgive me. Let's share the loss. All right, so it is minus 47 rather, plus 5 plus 10. So they are sharing a loss of like 32. So this one is 32,000 loss. Minus 47 plus 4 plus 14, 29 loss. Then this one, minus 47 plus 6, 41. That is also her loss. All right, so that is that. Lastly, the last year, 2020. So you write year of assessment 2020, then BP 0101 2020 to 31 12 2020. You have these same 3 people: Elom, Aram, Elinam. So the profit that was there, how much is it? So be careful. You said that one of them had a political appointment on this date. So that is just half of the year. So it means that the profit we will get over here, we need to divide it into 2. So if I divide this figure into 2, what I have there is 1031620. 1031620 divided by 2, because so half here will be 515810, then 515810. You see, they share the thing equally. So it means that as at this time, we will share it over 3, and this one will be over 2. So that is it. So this answer divided by 3, it means everybody here is having 171,937. I've rounded it. Okay, or 936, okay, 0.67. Let me do it like that. Everybody. So that is that. Then the 2 that will remain, okay, it will be 515810. Or yeah, I have put the 00s there. So if not, it will be 667. So that is that. Divided by 2 this time round, because that is 257,905. So what will happen? What will happen is that who left? It was Elom that left. Elom left. So for Elom, she will get just 171,936.67. 171,936.67. 171,936.67. Then the other two will be having this one. Where is it? The other two will be having this and that together. So plus 171,936.67. So the other two will be having around 40 something thousand. All right. So that is what they will have. Because they will have both. They will have this and they will have this. So they will have those two together. All right. So basically that is that. And when we add everything, it should be equal to the profit that we will have. So assuming that these two together, how much is that? The two together is like 429,841.67. If you like, let's multiply it by 2 and add the 1 of this woman. So it's multiplied by 2, then add that part, 171,936.67. Yeah, it takes me back to mine. It's just that there's a 0.1 difference. So this figure is what the two are having. So that is the figure we are picking to the remaining two of them. All right. So here you have, this one is receiving 429,841.67. And that's the same thing this one is receiving, 429,841.67. And that means that we have the 0 zeros. All right. The only thing we are supposed to do is the salaries and the interest. Okay. So the interest, to remember, this madam left, so she will have only 6 months. All right. So interest. So his interest, if it was annual, every annual 5,000, right now she'll be having 2.5, so 2,500. Don't forget, I've kept the 0 zeros at the top. All right, so that is what she will be having. That is what she'll be having. She didn't stay for the entire full year. All right, so basically that is what we'll have. She will have. Then, what about the other part? The other part of her 10,000 salary. 10,000 salary. Her 10,000 salary too, she will have only 5,000. That's all. As for the remaining, we don't have much to talk about them because they were there full year. Aram was there full year. So Aram will collect her normal salary of 4,000 and she will collect her the distance. So this, yeah, she will collect this one of 14,000. That's all. That's all. We are through with that. Okay, then what else? The woman that came, Elenam, who didn't have any interest. She didn't have any interest on loan. So any interest on this is, yeah, she didn't collect any interest. So for her, there is no interest. That is that. Then her salary still remains what? 6 million. So that is it. So for us, that is how it will be. Okay. So you just add them up. We are through. So thank you very much. And I'll see you in another time.